What's up everybody? Welcome to the Stocks channel. Tonight's stock market technical analysis is going to be a really quick update, so let's go ahead and jump right into it. So first up we have the SPY ETF, which is the SP 500 ETF, and we do see a bullish close today, closing up 1.66%. We also did see that the market gapped up again in the morning, and we do have an open gap of price action now where we have to acknowledge the price could retrace back into the $329 level range. We did also close above our resistance trend line, and we are starting to form a higher high on the daily chart as well as the 1 hour chart. We can see here that we did come back above this $331 level and close up higher at $334. So it's still too soon to say that this correction is over, but it is possible that we did see the end of that ABC correction and we're resuming that bull market. So remember, after the ABC correction, we do expect to see the bottom of C wave bounce, and we do have 3 green closes in a row now. However, we still do have a bearish trend with that 5 EMA trading below the 13 EMA as well as trading below the 50 EMA. But the price action is starting to look bullish with another close over the 5 EMA as well as a close above the 50 and the 13. However, to get fully bullish on this market, we need to see the price action close above this 20 simple moving average, and we need to see that 5 EMA cross back above that 13 EMA. So things are starting to look good for the correction ending. However, it's still too soon to become bullish on this market, and we're just starting to see the early stages of a reversal. To see that full reversal, we still need to see that price action close above the 20 and that 5 EMA to finish crossing above the 13 EMA. So remember, we did have that lower price target of $315, and we still have that price target until we see this market turn into a bullish reversal. So we're still a day or two away to see if this reversal is the real deal bull run, or if we're still going to be in this correction phase for a little bit longer. So next up is the Nasdaq 100, and we're looking at the QQQ ETF, and we see the Nasdaq also closing back above its 50 EMA as well as the 5 and the 13, but closing right about on the 20 simple moving average. It's still too soon to say that that 5 EMA is going to cross back above the 13 EMA, and we still need one more bullish close to see that that bullish trend starting to form. We still do have that bearish trend in the short term. However, it does look like it's starting to reverse. And if we switch over to a 1 hour chart on the QQQ ETF, we also see that we did form that higher high on the 1 hour chart. So it is looking good in the short term. However, we still have that bearish trend, and we are still in that reversal that we need to see it finish through if this is going to be the real deal reversal for this bull market. Now on the Nasdaq 100, we did come down very close to this 0.618 retracement, but we still do have these lower price targets at 250 and 245. In any event that we still do go down in this bearish trend, we do still have those price targets below. Now there also is a gap on the QQQ ETF, which you can see we did gap up from about 272 up to about 274. So we still do have these gaps below, and as you know, gaps typically get filled in these ETFs, so we need to keep an eye on those gaps. Next up, let's take a look at the DOW Jones Industrial, and we're looking at the DIA ETF, and we see the Dow Jones with a very similar story, closing up above its 50 EMA as well as the 13 and the 5, but still below that 20 simple moving average. So we're still in that bearish trend, but it is looking good to see if this correction could be ending very soon. Now on the Dow Jones, we did get down to our $266 range as well as the top of our gap, but we did expect to see the gap close at $264. So while we still do have a bearish trend and we still do have lower price targets, we have to remain open to the fact that this could just be a short-term bounce. Now, one thing we need to note is we did see the market going up on lower volume, which tells us that that big money, aka that smart money, is still not really buying in, and this could still just be retail investors jumping into the market. And we know that that big money could sell into this bounce and could sell into this strength and drive the market lower. Now let's go ahead and look at the Nasdaq 100. We also see somewhat lower volume on these up days that we've been having. And if we jump over the SP 500, we also see 3 days of lower volume on 3 days of price increasing. So the price is going up on lower volume, which tells us that it's not likely the big money driving the market up, and it's more likely the retail investors driving the market up. And we know that that big money likes to sell into resistance levels. So if we start to see selling at the 20 simple moving average, we'll know that the big money is not done selling yet, and it's not ready for this market to reverse back into a bull market just yet. The big money might still have more selling to do, and they might have just taken their foot off the pedal for 3 days, letting the market bounce so that they can sell into some more of that strength. The last thing that that big money wants to do is crash the market, so they're not going to sell every single day in large volume. They're going to let that retail drive the market back up, and that's likely why we're seeing the market go up on lower volume. but it's still too soon to say. And overall, we still have that bearish trend that we have to acknowledge. And right now, it's too soon to become full bull on this market. Now, that doesn't mean you can't start accumulating a long position in a slow amount at a time, but we don't want to go all in bullish just yet because we still have that bearish trend. So let's do a quick look at some of the sectors. And on the financials, we do see that we have this big gap above, and the financials could retrace and fill that gap before ultimately resuming their downtrend. We still see the very bearish trend with that 5 EMA way below the 13 EMA, but we do see this bounce that we're starting to see with the price action closing above the 5 EMA. So overall, the financials are still looking bearish, and we still have that very negative sloping 20 simple moving average. Then we have to acknowledge that the financials are still in a very real bear market, forming lower lows and lower highs that we have yet to break. On the industrials, we see we did close above the 20 simple moving average, but we still don't have that 5 EMA crossing back above the 13 EMA. So the industrials are looking good, but it's still too soon to say that that trend has reversed. On the healthcare, we see a very similar sign with the price action getting rejected right at that 50 EMA, and that 5 EMA still trading below the 13 EMA. So overall, all of the sectors and all of the indices still have that bearish trend, and we have to give benefit of the doubt to the trend, which is still bearish. On the dollar, we see the dollar closing above the 5 EMA still, and we still see that very bullish trend on the dollar. So if we see the dollar continuing to strengthen, we're going to expect to see this correction last a little bit longer. Now on the dollar, we can also see that that 13 EMA is getting ready to cross back above the 50 EMA, which means this bullish trend is only gaining momentum and gaining strength, and we could see the dollar continue to go higher, which could cause the stock market to continue to correct. On gold, we're seeing a short-term bounce, but we still do have our support level down at 1800, which we think we're heading down to. And if we want to be a buyer of gold, we want to wait for that support level before we start entering into a position. So that's it for tonight's update. Like I said, it was just going to be a quick update. And remember, we're still in this bearish trend that we have to break before we get bullish on this market. And we really would like to come up here and break this $342 level and form that daily higher high. So if you didn't catch this bounce, I would not FOMO into this strength because it's still a bearish trend. And buying into a bearish trend would be like shorting into a bullish trend. It's not the right time to go long. We need that confirmation that this bearish trend has reversed, and it's going to pay off to be patient in this situation, because once we see that trend reverse, we'll have a lot more clarity and we'll know if this bull market is going to be the real deal before we go into too large of a long position. So thanks for watching, everybody. We'll be back to normal operations starting tomorrow. Sorry for the quick update, but I figured a quick update was better than no update. So thanks for watching, and I will see you in the next episode.